smiling, rather I should say, smiling faces of our speakers, CA Priya Lunawat and CA Annapurna Kabra. Priya will be taking us through on audit documentation. As soon as 31st July will be over, each of us will be busy in the audits, and that's why we thought we should prepare all of our intelligent, beautiful women fraternity with this audit perspective, and that's why we have invited Priya Lunawat for taking this very important session on audit documentation, planning and everything. Again, GST all the round the clock, each day by day, the importance of GST is increasing. As now on food grains and the loose things, also the GST has been implemented. And hence we thought every, at least in a month or once, or in a month or 2 months, GST session on the GST has to be there. And this time we have invited Annapurna Kabra for taking this session on GST. Again, we are seeing over here on the screen our very beloved coordinators, and we can say the moderators, and one of them senior member and the guide and the mentor to so many CA women is CA Anita Pangavkar. She is from Pimpri Chinchwad, and she has been also the vice chairperson of Pimpri Chinchwad branch, what I recollect, and she has also taken a lot of initiatives, not only at the branch level but national levels for the women fraternity. So welcome Anita madam to this national program of Sky High Symposium. Again, we have Rupali Bothra. She is from Aurangabad and managing committee member of Aurangabad branch. And we have done a lot of programs on physical mode at Aurangabad, specifically for women also, for taxes, the audits and technology. And she has always been instrumental for sharing the knowledge for women fraternity. And on Companies Act also, one series what we have, excellent series what we have planned 2 years back. So Rupali, welcome to you over here in the national program of Sky High Symposium of WMEC. Again, we have
your support. Thank you.
Yeah, we have with us CA Hiral Mehta, and she is the deputy convener of Mahavir Nagar CACP Study Circle, and she is also doing a lot of programs and taking a lot of initiatives for Chartered Accountants Fraternity. And this is a Sky High Symposium 16. So friends, it's really a dream coming true. Every week we are meeting with some or the other sessions for our women fraternity, and this is possible because of this new technology also, and the support of all our women fraternity who are ready to take up the session as a speaker and also as a moderator. So thank you all the speakers and moderators, and also my dear fraternity members. We are coming up with different kind of sessions, and I am always there to see that our leadership, our women leadership is there at all the levels.
Ma'am, without your guidance and support, it is not possible. And thank you for giving this opportunity on the national TV, live.
Yeah. So whether it is the ICAI platform at regional level or branch level, or at corporate levels, or at business levels, or at CFO level, so the leadership and the gender diversity, which is also one of the very important criteria for social development goals. So that is very important, and promotion of that and the motivation. I feel that with this Sky High Symposium, we are motivating all the women fraternity by having this program by the women for the women. And with this, we are motivating so that more and more women fraternity who have taken break in their life, or some or the other reasons, are coming back. And one more news which I thought I should share at this platform is that, as I'm also the vice chairperson of Sustainability Reporting Standard Board, and we are working very closely for social audit standards. So SEBI has come out with the notification yesterday, that is their ICDR, and in that they have notified social stock exchange. So now the NGOs or the charitable trust or Section 8 companies which are there since last 3 years and having certain criteria, there will be a separate stock exchange, and that is called social stock exchange, and they will be able to list their NGOs or the trust and able to take the donations from the public at large in zero coupon, zero principal bond form. So the notification has been released. We are developing social audit standards, because now there will be for CSR expenditure and this social SAC, that is the company's charitable trust who are listed on the social stock exchange, there will be separate audit type, and that is social audit. So social audit concept is coming. So we are coming up with SRO, and that is a regulating authority which will regulate this social auditors. So we are coming up with that, and NISM will conduct the exam. Like for valuation, RVO, NISM has conducted exam. So for this social auditors also, NISM will conduct the exam. So this is the broad structure, and which will be in implementation maybe in next 2 to 3 months. So stay tuned, and this is a large opportunity even for women fraternity also, because they can work full-time, part-time, and specialize in this CSR and this social development goals, and it's a large opportunity. So with these words, once again, I welcome all of you to this Sky High Symposium Series 16, and we will meet on every Wednesday 5 to 7. Stay connected, stay tuned. Thank you very much, and over to the moderators.
Thank you so much, Preeti. And I request CA Rupali Bothra to introduce the session speaker, CA Priya Lunawat.
Yeah.
Over to you, Preeti.
Thank you. Thank
Rupali.
you. Firstly, good evening, everyone, and would like to thank Women Empowerment Committee and Preeti ma'am for giving us this opportunity. My job is to introduce our first speaker for the day, CA Priya Lunawat. Young and dynamic, I must really say, and a very need of the our topic, audit documentation. जितने भी firms, बड़े हो, medium scale हो या small firms, they are really facing with this problem. And near future, when we see a peer review is going to like deepen, so this audit documentation would really be the key concept. And would really like to thank Priya for accepting our invitation, and would like to introduce her from a city of Narsingpur from Madhya Pradesh, and qualified her CA final in 2018 and is practicing in Bhopal. And also as she has completed the IND-AS certification course from ICA. Her main area of practice is main area of interest is public speaking, and thus she is a faculty associated with ICI Bhopal branch. She has a keen interest in audit and assurance, and currently is practicing in audit, both in internal as well as statutory audits of listed companies. So welcome Priya, and over to you.
Thank you so much, Rupali ma'am, for such kind words of yours. Good evening, everyone. First of all, I would like to extend my warm thanks to the entire Women Development Committee, Preeti ma'am, Anita ma'am. Thank you for giving me this opportunity. We have been speaking a lot about women empowerment and things related to it, but experiencing it practically gives a lot of boost. And you made this happen. It's not just on paper about women development, but practically what we are seeing today. So thank you very much for giving me this opportunity. I would be frank enough, being young, I'm quite nervous here, but the introduction and the connection I had just now gave me a lot of comfort to present what I have prepared. So without further ado, with your permission, I would like to present on the topic audit documentation.
Please go ahead. This is what we want, that your comfort zone has to be there, and your confidence, you have to gain that confidence.
Sure. Yes, ma'am. Thank you. So yeah, as Rupali ma'am rightly pointed out about the audit review and documentation, which is the topic that I wanted to go ahead today, is such an important topic, but yet such vast and way out that it is difficult to put it in a file. We have been doing a lot of things. There's not a single CA who does not work on any stuff, but actually keeping it in a file becomes very difficult. I would like to start with a story of mine. I just started my articleship, and we can bring it up. Here I am with the topic audit documentation. So let's start with the very basic question: what documentation is? Means how should we define audit documentation? Now there is SA 230 audit documentation specifically assisting the auditors what needs to be documented, and it reads the definition as under audit procedures performed, relevant audit evidence obtained, and conclusions the auditors reached. And we usually use the terms such as working paper or work papers. So the important part here comes is that it is recording of each and every audit procedure one has performed, the audit evidence, and how the auditor has reached the conclusion. Now, the next very important question comes is that what is the need of audit documentation? Means there are two things. One is that there's a legal requirement, and the other is where it assists us, because any law that comes into picture is only because to assist the people to ease out the living. So, I have categorized this into majorly three things. There are certain laws and regulations which ask us to maintain the audit documentation. Say, for example, NAFRA coming into picture, the peer review, cost records. So these are certain laws and regulation. Then there is SA 230 audit documentation, which specifically deals with the audit documentation that needs to be kept, the minimum requirements. And then there are other essays. So audit documentation is one essay which gives a broad view, but then there are other specific essays as well, which highlight about the documentation. Say, for example, management representation, understanding the entity, agreeing to the terms of engagement. So these are examples of some of the other essays which ask us to prepare the proper audit documentation. Now, this being a type of legal requirement on us, the another comes is the purpose. Why is it made mandatory? Why is it so important? So first of all, assisting the engagement team. When you have a broad engagement team, number of partners working together, the clients and your engagement team with the articles and other employees, it becomes important to distribute the responsibility to take care of everything. It also is helpful in directing and supervising. It becomes very difficult with a team of 10 people to call and ask each and everyone what's their work status, what they're doing, not doing. So with a proper audit documentation, it brings a lot of ease. Then there makes definitely accountable one who has done what part and who is accountable for that. It is even important for future audits. Whatever we are doing today, we always look back at what we have done, what were the queries that were already raised, how it has been tackled. So it also becomes important. And the last one being very important, both the internal and external reviews. All of us would agree with me then in past years, there has been a lot of knocking at CA's door by each and every authority, be it SEBI, be it NAFRA, be it bank, any department. There's a lot of questioning, reviewing, everything that's going on, or say for peer review, which even forms part of a lot of tenders, documentation, even CAG registration part. So these are the inspections, be it internal, external. It becomes really important for us to keep proper audit documentation. So this is the need of purpose why we need to prepare audit documentation. Now, what's the nature? What it should be? Means what should be there in file? Should we just take each and every paper and fit in? So SA 230 very precisely points out that it should have all the relevant paper which suggest how you have reached at a conclusion. That is, how the auditor has concluded, whether he has to modify the report, not to modify the report, opinion what he has to give, and how has he concluded it, what all things made him believe and understand the conclusion, and to evidence that audit was planned and performed, basically giving all the timelines, how the things were done. So these should be the nature. The another important question that comes into mind is what are the timeliness and extent. So timeliness is, as we discussed in just the previous slide, that audit documentation is important for us to reach at audit conclusion. So fair enough, the major chunk of audit documentation should be completed before reaching at the conclusion. Definitely, practically speaking, there are a lot of things, maybe signing off, the reviewing part and all of that, which we do after signing off report, which is very practical, that even SQC has taken into account. But the major chunk of working paper which is required for you to reach conclusion should be done before the date of audit report. And what extent? Again, the question, how many papers should I keep? Should I make 6-7 files and keep all the things that I have done and everything? So the essay gives a very precise definition, yet very large definition. So it's really intelligent of them to write. It should be sufficient for experienced auditor to understand. Now they have said, pick any auditor who is not related to the audit at all, who doesn't know what the company is, whatever he has done, but just on the basis of your working file, he or she should understand what was the audit, how it was planned, whatever were the conclusion, and things are right or not. He should be able to form an opinion based on your working paper. So that's how comprehensive the audit papers, the working paper needs to be. Now, this was quite the theoretical part, which was even important to understand what working paper is, what are the requirements, and all of that. Now, coming to a practical point of view, the working paper requirements, as we discussed, have been given in chunks in many areas. There is SQC, there is peer review, the quality control standards for a firm, then there are standards on auditing, then there is NAFRA. So each and everyone has their own requirement and all of that things, which not specifically might relate to the audit, but may surround around the audit. So I have tried to cover these parts and have divided them into 4 stages. That is preliminary activities, stage 1, stage 2, post-appointment formalities, stage 3, in-house audit procedures, and stage 4, field audit procedures. Now, these stages are not defined anywhere. Just for the sake of convenience, I have divided them here. Preliminary activities are basically those activities which we need to undertake before accepting the audit. Post-appointment, that is once the audit is with us, what needs to be done next. Third is in-house audit procedures, that is before visiting the client, the internal working, or you can say the homework that we need to do. And field audit procedures, basically what needs to be done at the client place and how it is to be documented. Now, when I'll be going through these stages, it might seem like that I'm talking about the action that is to be done, but I'm actually talking about the working paper that you need to prepare. The stages that I have put here and the documentation I would suggest is minimum in requirement. Definitely more can be added as sufficient the auditor may find based on his professional judgment. These are the basic things which should be present for every client that you are having. Maybe certain deductions can be made accordingly. So let's start with the stage 1, that is preliminary activities. That's before the starting of audit, what we have. So there's proposal letter from client. Now, first of all, we need to have a letter from client that they have requested us to, have the audit conducted. They have asked us. Now, most of the time, this preliminary requirement or the proposal is on telephonic conversation, or either it could be on email as well. If it is sufficient, email is there, it's well and good. If it's not there, you can anytime ask your client, just can you mail this? Means it's a very small line that we need to say a client, but we miss most of the time. So whenever there's a telephonic conversation, one can always ask, okay, I'm good to go. Can you just mail this request? And that will form your part of proposal letter from the client. The second point that an entity should do is prepare the client acceptance checklist. Now, this is a very basic thing that we all have been doing. Whenever client comes to us for taking up the work, all of us do is to review what actually, the client is doing, what's his turnover, whether we have the sufficient infrastructure, whether the fees that they're offering is comfortable or not, we have the expertise on this particular area and not, or whether we'll be able to do, his background, what are the legal. So this is what a client's acceptance checklist is. This we are doing orally, but can be written down as well. Once we are okay with our client acceptance checklist, that needs to be done. The next thing is to give our consent and eligibility letter. Now, consent is that we are okay, we are ready to do your audit, and eligibility is that we don't have any barrings on us to do the audit. Maybe barrings as per Companies Act about the limit, maybe tax audit limit has exceeded or not, so that might also be there, or independence issue. So we are free from all of these, and thus we are eligible to act as the auditor. Once we are okay with the consent and eligibility letter that we have given to the client, we need to ask for the appointment letter and AGM resolution copy if it's a company. Moving after that, a very important part is to obtain NOC from the previous auditor. Once we have the NOC from the previous auditor and he or she has not raised any objection, we can give acceptance letter to the client that yes, you have appointed, we have taken the NOC and we are good to go with your audit. So this is the acceptance letter. And after that, we need to have copy of ADT 1 filed by the company that is appointing as the statutory auditor, or any other legal requirement based on the assignment that you have undertaken. It just gives us a cover that statutorily all the dues are also completed. So talking of stage 1, here are some of the specimens that can help and assist. It's not a very, I would say, a conclusive one which should be there, but it's just suggestive in nature, which you can use and prepare according to your organization and firm. So the first one that we were discussing was about the client acceptance checklist. So I like to highlight the major areas, like whether it's a new client relationship, is it a recurring engagement, then some of the basic questionnaire that we go, what are the basic characteristics and integrity, overall commitment, organizational structure, nature of business, and how ethical they are, firm's ability to comply with the auditing standard, that is, will we be able to serve that significant transaction, accounting issues that we are not comfortable with, independence, conflicts, the firm's ability to complete the engagement with professional competence or any other matters. So this could be a checklist that one can prepare before accepting that, yes, we have understood what are the requirements of the client and we are good to go with it. And hence we have taken the client acceptance or continuance checklist. Now this is the specimen for the consent letter. So here, just giving the name to whom to be addressed, and giving actually it's when we are preparing working paper, it is very important that we give reference to the previous working paper. Means on what basis? Flow should always be documented. So, having given the reference of proposal letter, the act, the requirements, we are okay. And you can just go by giving a letter of consent. And now this is the certificate for eligibility, where one is certifying that we are not disqualified, would be as per the terms, means whatever the terms under the act, will be conducting that within the limits laid down. And with respect, no proceedings, no litigations are pending, and we satisfy our criteria. So, just giving the eligibility that we are okay to be the auditor. The another is acceptance of appointment, again being a very simple letter with reference to the appointment letter that one has obtained, and giving the reference of appointment AGM, and giving our confirmation that we'll be ready to carry out our audit. So these were some of the things that we need to do before even starting the audit. The second important part comes is post-appointment formalities. Again, these are the activities where we are not actually doing the audit, but it is just for the our proper documentation that we are good to go and have complied with each and every standard on auditing. So it starts with obtaining the KYC, that is know your client, the basic understanding of the client, their registrations, PAN, TAN number, MOA, AOA, who all are in the management. Then obtaining the signed engagement letter, and then independence and confidentiality declaration by the team. Again, there's a requirement. Then one should obtain, when there is an assignment of audit, a declaration from the entire engagement team that they are independent, because it might be possible a small article trainee may be somehow related, or a partner relative may be related. So obtaining the independence and confidentiality declaration from the team, whoever we have discussed. So this is the specimen for KYC of the client. So, it starts with the nature, whether it's individual, company, whatever it is, client details, the registered address, registered number. So one can always do is share this checklist with the client and ask them to even provide the relevant supporting document along with this. Say, for example, address, registered office, and other location, registration number, date of incorporation. So we can ask for incorporation certificate, the company's profile from MCA, registered office, any utility bill, PAN, TAN, GST that we are discussing here. So relevant copies of all these documents, nature of business, the industry they are operating in, group details, whatever is there any holding, subsidiary, joint venture, so as to, and then the directors or any of the trustees of the organization, the major parties who are involved into decision making. Then what are the major laws that are applicable to the company? These are important part which we need to consider before making the engagement team. So it becomes important. So also, though, we should be well equipped with the knowledge of the entity we are doing the audit of. So it serves that purpose. And then nature of engagement, whether it's statutory, limited review, special, tax audit, whatever, what are the applicable gaps. So again, this is just an example. More can be added as per the requirement of the firm. The next is that about the independence and confidentiality declaration that one can always team. So, giving the name, their designation, whether they are partner, their article assistant, or paid employee, whatever, engagement, the client we are talking of, and a number of criteria that my relatives do not have investment, have not borrowings. These are the main items from the Companies Act, and my relative executive director. So they are giving here are a number of areas which one can look into, maybe as per Companies Act, and also the CA Act, which specifically focuses on the independence. That all clauses can be added, and a declaration from the partner with their signature, name, date, not only partner, whole of the engagement team can be taken. Moving ahead, it's an example of engagement letter, again, it becomes very important to take the engagement letter from the client. So I'll be highlighting the major headings that we need to consider. So the engagement letter should be on the letterhead of the CA firm with salutation to the board of directors, name of the company, whatever is the engagement, any other services if we are providing along with the statutory audit. Say, for example, GST audit, tax audit, you can prepare one engagement letter for both, or say ROC services. Then what would be our responsibility and limitations? What should be the management's responsibility? One can also add the fee structure, what will be our reporting, how we'll be going for the peer review, and who will be undertaking the audit. And then there should be sign off by the CA firm. The engagement letter should be signed by the relevant partner in charge, given to the client, and a sign off should be taken on that engagement letter. So it should be done in 2 copies, one in the custody of the client and other in the custody of the firm. So 2 original copies can be maintained of engagement letter. Now, these were the things we have done before, कहते हैं कि पूरे थाली सजा लो, and now we have to dwell into it, start our audit. So the stage 3 and stage 4 are more of documentation with respect to the conduct of audit. So it starts with engagement team discussion, initial meeting with the client. Now I'd like to focus that these parts are not just about, doing the stuff. Again, it is documenting everything. So documenting the team's discussion, what has been done, documenting initial meeting with the client when we are ready to start the audit, we have a meeting with the client. Conduct risk assessment project and understanding entities environment, engagement team discussion, assessing materiality and audit procedures. Now it becomes very important to document materiality. So earlier, 10-15 years back, materiality was defined in the essay with respect to percentage of turnover and balance sheet. But now it is more on the auditor's professional judgment, what the materiality will be. So it's very important how it is decided. I have even come across cases where, we have done the lot of audit part, and suddenly there's a question. We were doing actually done an audit of a cooperative society bank, which was not computerized and all of that. And after a point of time, it was a large NPA bank, went into audit of societies. And there came, when the society was doing the audit, the government officials were doing the audit, a letter was issued to us stating that following are the accounts and such discrepancies has been noticed, particularly in investments, and you have not commented upon the same. So we gave them about our standards on auditing. We have taken a sample and accordingly we have done. Now another question came, how have you decided the sample? Then again, it was materiality and all of that stuff which we have done with the essay, we communicated them. So the question came, how is materiality decided? It's a very subjective matter. How have you reached at this point that this should be material? So at that point of time, yeah, the documentation was not very perfect, but somewhere or the other, we had written certain points. Yeah, we'll take the limit above this and we find this as important. Hence, this is materiality. And these are the accounts that we'll be reviewing. So it becomes important to make a note of how have you decided materiality, how have you selected the samples. Maybe you go by like vouching for every voucher above 1 lakh. So need to decide how that materiality has been arrived at. Then need to prepare the audit plan, procedures, schedule, communication with TCWG, that is those charged with governance. Now, communication with TCWG is to be done in 2-3 stages. First of all, upon the initial engagement, when you are starting the audit, the first thing is to be communicate with the TCWG regarding we are starting the audit, this would be our timeline, and we want to finish by this date. The second could be during the audit, when we do have significant audit findings, how we have reached at that conclusion. And so it is at the end of audit. But during the audit, if there is any fraud or something, the same needs also to be communicated with TCWG. So communication with TCWG is more or less 2 or 3 letters that are need to be issued and not only one. Then issue the requirement letter. Now this also becomes very important. The requirements that we state should always be written and given, and reply from the auditee should also be taken. Yes, no, not available, not possible, for whatever reason. Because, you know, a very important part, even our essay suggests that we can modify our opinion if sufficient documentary evidence was not provided. So one needs to always have in mind or documented that we have asked for these things and these things were provided or not provided with a written reply from the management. That may be the nature of the industry, or due to the issue with the software or something, this report is not possible, hence not presented, or whatever could be the reason, but should be taken in written from the management. Stage 4 is the complete audit checklist. Now, audit checklist is something that should be developed over a period of time. It can differ from one client to another client, could be very different. Yet, definitely we do have ICAI's publication which gives a checklist. One can always cut down, increase, decrease, but it gives a lot of satisfaction with regard to the checklist or the work that we are doing, what we are looking into, and a confidence that nothing is missed. Then again, issuing the query sheet, it is important that one should issue query sheet and take again return replies from the management with relevant supportings. Then communication with TCWG, forming an opinion, taking sign off on the working papers from partner in charge. Definitely all of the working papers should be reviewed by, prepared by. There should be signature, there should be accountability, proper numbering, proper indexation should be there, and then issue of audit report. So, you know, stage 3 and 4 comprises of lot of documentation requirement. So I have prepared few of them, like internal control questionnaire, risk assessment, materiality template, and so. So let's just have a look into these. Yeah. So, you know, we discussed about understanding the entity's environment, what they are into, what are they doing, control, so as to decide what further audit procedures we need to take. So you can always prepare a questionnaire like this with respect to certain questions, and same can be taken comment from the management, whether it's applicable, not applicable, and working paper references or observation, if any. You know, like there's one for share capital, there's one for borrowing, what are the board resolution, how much can be borrowed, who has the authority. So this helps in understanding the environment of the entity and for us to decide what should be done in the audit, which brings to the next part, that is risk assessment, where, you know, each and every auditor, we feel what are the important part. For say example, I just did a audit of statutory audit of a manufacturing company, and after having a heavy discussion with the department, I realized that there needs to be specific attention on stock, debtors, provisioning, because it was more on the management's judgment, and I felt there could be possibility because it was not something which was controlled by the software or something. There was no policy. It stated as divided by the commercial, they could understand. And so I understood that these are the areas which need more focus. So that the area of risk one can identify where they're focusing. This is what even CAMS, key audit matters, that has come into picture, which you find are the most significant matters which you'll be looking into audit. Say, for example, legal cases provisioning. It's again a matter of judgment, and most of the auditors find it necessary to actually dwell into it. So there could be description of risk. How have you identified that risk? Which financial statements are impacted, either profit and loss or balance sheet? Is it asset that is impacting the liability, whatever it is? Then rationale for risk assertion, specific audit procedures that one have used to mitigate the risk. So what are the significant areas that you have focused during your audit? And so now the another things that comes is materiality template, how you have reached to a materiality level. So again, who are the users of financial information? What are the qualitative consideration? We know when there is RBI involved, when there is some much involved, so our materiality shifts. When no one is involved, when there is no specific authority, our materiality is different. So what could be the other qualitative consideration? Then you need to prepare the financial data, which plays a significant role: turnover, gross profit, expenses, total assets. And then how you have decided the materiality, what is percentages applied, and what could be your materiality. So that's how you go for applying the materiality and writing the reason why it is important. So it's a materiality template which can be prepared. Now team discussion, it's just very simple thing, preparing the minutes of the meeting. Whoever has discussed the thing and what were the points discussed can always be written and documented. Even the initial meeting with the client can also be documented like this. Then time budget, it is actually more of a requirement of peer review for you to justify your fees, how one has reached, so that there is no independence issue and the fees is justified as per the work done. So name how many people, the budgeted hours, and rate which your firm fixes for each of the category of employees. So whatever is your total budgeted, how much time needs to be allotted and has been given. Then one can prepare the audit program. So audit program is more like a shortcut of audit checklist where all the basic details are given. The important part that needs to be taken is the date when this was done, who has checked it, who has reviewed it, was there any query, and if yes, what is the query sheet that has been issued. So this becomes important. Then there is audit schedule, who has visited what date and have done what part. Progress sheet. Now this is something very important when we are sitting at our place and the clients, the engagement staff is at client's place and doing lot of work and calling and asking each and every time who is doing what. So this is something, and I would suggest every firm can have this on their Google sheet and ask their articles to daily update it, so that sitting at any point given time, you can just review it, what's the work done, and it gives a very good documentation as well. So the date, nature of work done, that is either it's vouching, fixed assets, whatever, period covered, total transaction, aggregate number of transaction. It's just a very normal questions we ask to our team. Kitne vouchers kar liye, total hai kitne, how much time you have taken. So, writing all of those things here, percentage. So what were the observations? If there is something to be found, action taken, discussion with the management, what they have given and what are their remarks. And this is an example of query sheet. Now query sheet should be very important with observation, annexure, management comment, and you would see auditor's remark. Now this fields become very important. Whatever query one has raised, so what are the auditor's conclusion? Whether he or she has considered this point to be closed, or if the point was right, but it was not material, hence not taken into consideration. So one should write that amount not material, hence closed. If it is material and one has modified the report, then you can always write modification in the report required. So all of your queries, whether you would have modified the report or not modified the report. So if not, then specific reason needs to be given. Rectified, then it is closed. not rectified, but then also opinion not modified, then what is the reason which you are agreeing to and have not modified the report? So this also becomes important. Now, giving the specimen of some of the another part, like so this is one of the specimen for how to communicate with TCWG on the letterhead, giving the name and what we are doing. There could be a requirement list, which it's always important to give everything in the requirement list and then take a written reply from the management, whether able to give it or not. So it's a specimen of management representation letter that is to be taken on the letterhead of the company, with giving about general things, accounting policies, going concern, internal control assessment, subsequent events, and then a lot about all of the balance sheet heads and expenses. So whatever one feels like should be important would be taken into consideration. So these were some of the areas. There are definitely a lot more areas. Maybe, for example, when you are relying on the work of another auditor or some of the expert, say, for example, the actuarial valuation report or anything. So how you have understood it, or you might have taken written representation from some lawyer or another external internal entity that could form part. When you are a group auditor, the group auditor audit instructions issued to the team. When it's a joint auditor, then classification of work, division of work. So there are a lot more areas, but specifically these were some of the minimum bare requirements which I felt are worth sharing, and I have documented them. Now another question comes is about the limited review. So we all know that, again, limited review is not an audit. It's a very specific task given for a very short amount of time, with the only question being that the financial statements are not materially misstated. So it does not ask us to do the audit. So what should we do? So I'd suggest stage 1 and stage 2 is to be done for every type of assignment one is undertaking, be it audit, internal, statutory, stock audit, whatever. So the preliminary and post-appointing formalities needs to be done for every type of assignment the firm is taking. As with respect to limited review, there are two standards, that is SRE 2400 and SRE 2410. So 2400 is for the firm which is not the statutory auditor, and 2410 firm which is also the statutory auditor and the limited review. So the basic requirements that those SRE suggest are engagement letter, communication with TCWG, audit requirement, program, schedule, materiality, comparative statement. Basically, limited review always focuses more on analytical procedures. So there are no substantial procedures that needs to be undertaken in limited review. So a comparative statement with material variations and all of those gives a good compact of the analytical procedures that the firm has done. So that's it. And obviously, management representation letter, any query sheet, bank balance confirmation letter, important, and list of working papers maintained in the soft copy. That can be done for every type of audit, keeping things in physical and in soft also, because nowadays we do not take printout of each and everything. So you can always in your permanent or working paper file keep a list of documents that one has maintained in soft copy and arranged there. So we can always go by that. So these were some of the basic requirements of the audit documentation. Now here are few of the generic questions that is there, like how is audit file to be prepared, for what time, and how much time it is to be retained. So, the audit file, as we discussed, major part should be completed before signing of the audit report. But post signing of the audit report, SA suggests 60 days are more than enough. So within 60 days, taking the final sign off, all the indexation, numbering, and if anything is left about printout, and all of those work with review from the engagement partner and others should be completed within 60 days from the date of signing of audit report. And whether it is to be on paper or electronic media, so it is available in both. Whatever you are preferring can be done. However, it should be preserved in such a manner that it cannot be changed or altered, because once the audit documentation is final, it should not be changed. So even if it is stored in electronic media, it should be somehow logged, or there should be a log so that not everyone can access and make changes in that. So there should be proper control for that. Then if about retention, so the SQC1 and SS prescribe that the audit documentation should be preserved for 7 years from the date of audit. So for the financial year, from that financial year to 7 years, the documentation should be kept. Now, who has the ownership of those documentations? So working papers are truly in the ownership of the auditor. And if the auditor feels at his discretion, he can make available certain extract or portions of the audit documentation available to client or any authority. But again, it's at the discretion of the auditor. So the ownership of audit documentation lies with the auditor. Now, here I have taken few FAQs which can help, which will assist. So the very thing we have discussed so far is what should be included in audit documentation. The question comes is what not, because every time you fear whether I should just make it chunk, should I discard it or not discard it. So the essay has given the reference like drafts of working paper, financial statements, or if you have a paper which was incomplete or there was clerical error, you made them to make the changes, you can definitely keep the new one and discard the old one, whether they are duplication of documents. So all of these things should be eliminated. What final it is should be kept in the working folder. Oral explanations are not sufficient. It should be well written. Another question is that to what extent should audit documentation be done in case of smaller entities? Because we have number of audits where one cannot devote a lot of time as per the fee structure and even the structure of organization. So what should be the documentation requirement? So the audit suggests that it should not be very extensive when it is a smaller entity, but it should be there. When engagement partner is itself doing a lot of work, so many of the documentation like team discussions, schedule, and all of those things could be eliminated, but yet it should be in such a way that it can be understood by an experienced partner. So the documents that are required to assist an experienced auditor should be there. The next is how it could impact a peer review. So again, documentation becomes very important when you have peer review, and it's a very ongoing process. So if the peer review determines that the audit evidence are not necessary, are not there, was not documented, or certain has not been done in accordance with the essay, so the peer review will definitely issue a report under stage 1, which will ask to review those documents and prepare and reply on those. So there would be a recommendation from the peer reviewer. It won't be a clean report. So what should be the documentation is case from departure from any requirement of any essay. So we all know that all the standards on auditing are compulsory and mandatory in nature. Yet there are times where we are not able to do or comply with a particular standard on auditing. Say, for example, sometimes maybe due to location or other problems like COVID or so, we were not able to attend physical verification that was conducted on 31st March 22 by the management, or 21, whatever the year end, we as an auditor were not available. So in that case, your documentation should always give an answer that if this essay was not complied with, what were the reasons for not following it? And since that has not been followed, what are the other audit procedures that you have used? Say, for example, what we were discussing about the stock audit. So requirements like physical verification report of the management, looking at the trend of incoming and outgoing, issue within next month, the consumption ratios, all of those things, verification of vouchers, anything, gate entry, eBay bills, whatever you have relied upon. So the other audit procedures you have used, and also the reason for not following a particular essay. Now, another question that I have, what should be the documentation for matters arising after the date of auditor's report? So we have done that. Once the audit report is fine, the documentation is final, it should not be changed. However, there are circumstances which, there is subsequent reporting of auditor's report because of the facts and conditions that were existing on the date of audit, which auditor was not then aware, but now is. So in that particular time, what should be the documentation? So one should always give the circumstances that has led to this part. What are the new or additional procedures one has conducted, who has done, and what it has resulted in the change of opinion. So that's more of FAQs. Here are some of the ICI's publications for reference. They're very good and can assist with all the formats and everything. So there's Implementation Guide to Standard on Auditing, Essay 230. Practitioner's Guide to Audit of Small Entities. It's a very beautiful publication which gives a lot of formats, checklist, and understanding if we are doing the audit of small entities, how it is to be done and what needs to be done. And then there's another e-booklet on sample checklist. So it's in a very booklet form which you can print out and just write yes, no, whatever, and the remarks. So it gives a sample checklist on all essays for standard on auditing, what needs to be done and what are the documentation as per each essays. So these are the things, a few of the publications of ICAI that one can refer. Now I would suggest going practically ahead. Audit documentation, if we feel is a burden, it seems burden, but maybe with one or two specific clients we go after, it becomes a habit and then it's not a burden. So most of the documentation that I have suggested, like the stage 1 and stage 2 documentation, one needs to only prepare a type of, a particular formats. Once those formats are prepared, one is good to go for each and every client, and it won't take more than 1 hour for any client. So it's more of just one-time effort. You can always prepare only one Excel file with each and every document in that. Starting any client, just start with that, have a checklist, keep it in your working paper or permanent file, and then just start ticking whether it's done, not done, and take follow-up. So it becomes easy. Maybe it's difficult when you're doing for the first or the second client, but once it is done, it becomes easy. Preparing these formats, making the engagement team, the staff aware about it, it is a one-time task. After that, it becomes easy and feasible to do. So that's more from my side about the standards on auditing and the audit documentation. Very important for all of the firms, for every assignments to be kept. So
Thank you, Preeti. Priya.
Thank you, ma'am.
Thank you, Priya. Very well explained. Very lucidly you have explained this. We'll take quick some questions we have.
Okay.
So one of the question from Rajni is, for a private company only doing export and turnover is only 1 crore, whether will it give audit engagement letter to auditor for doing statutory audit?
Again, I would say the pre and stage 1 and stage 2 engagement letter and these stuff, they should be done for every entity, no matter how small it is. Maybe when we are talking of few lakhs, it's okay. Even if they are into only export business or only one type of business, it's a small entity, but one should always have an engagement letter. What understanding we do have with client. I'll give you an example. You might have even listened. There have been conflict and there have been certain cases even by the very small entities on CA with, some of the nuisance things like they have not done this part, they have not filed it, or they have written the wrong part. So at that point, your engagement letter becomes very important, which says specifically what was the responsibility of the auditor. At times there comes a problem like आपने ITR में ये गलत भर दिया or your financial statement was misstated. The auditor has not done, the CA has not done. Then engagement letter plays a very important role, which clearly justifies that it was the responsibility of management and we were only responsible for reviewing it. We do have that understanding with the clients about there are relations, but documenting is always good to go. So even if it is a small entity, engagement letter is a thing one should go ahead with.
Yeah, and another query that would the client acceptance checklist would be the same for all firms, for small firms and big firms? I mean,
like client acceptance checklist is, some of there are basic things which one should go ahead with. Like it cannot be same for every client. When you are in a small city, the fee structure of that city would be different from the fee structure of a bigger city, when there is a metro, there are a lot of differences there. So might not be same for every smaller firm. It is more for your understanding. I would suggest it is not a mandate from the SA with like this should be there. It's what you are doing. When you are accepting a client, there are basic things which should be there with regard to understanding the basic legal structure and what the entity is. If you are sufficient, you are okay, it is good to go. Yeah, it would be different for small firms in smaller cities, firm in bigger cities, where there would be difference of fee structure, the timings, the type of work. So that could be differing from firm to firm. There's no fixed format that this only needs to be followed. So it can differ.
Yeah, we have also got nice comments that the session was really nice. Thank you, Priya, so much. I express my sincere gratitude to you. You have spared time and very lucidly you have explained us the importance and requirement of documents. You have rightly stressed that work not documented, then it's not done. I think that itself explains your whole session. And I guess while doing auditor himself parallelly do self-audit, especially to understand the basis of conclusion, right?
Right.
Be it the need of law or whatever, for us to refer back, we need to understand what was our basis of conclusion. So, and your checklist of client acceptance is really exhaustive. And it really, even if a small firm, I believe, has to be professional and to do justice to your own credit in our fraternity or society, we really need to assess ourselves first before the taking assignment. I really thank you on behalf of the WMEC and the entire participants for taking out time and giving such a lovely presentation. Thanks a lot, and above all, completing the session within the allotted time.
Yeah,
so
that is
a big thank you to you.
Best part.
Yeah, which we always face in other sessions.
Because she has covered everything in detail also, and it is very, systematic manner. It had gone from start to end. So it was very nice presentation too.
Thank you so much.
Thank you so much.
I request CA Hiral Mehta to introduce CA Annapurna Kabra, our speaker of the next session on latest amendments in GST.
Thank you very much.
Thank you. Because of the WMC and Preeti Savla madam, I have got this opportunity to be, live for this coordination. So thank you. And on behalf of the WMEC, I now welcome CA Annapurna Kabra. She is an FCA. She is practicing based in Bangalore, and she is partner in SKA and Associates. She is a fellow member from Institute of Chartered Accountants. She has completed her DISA and DIRM course as conducted by ICAI. She is member of Bangalore Study Group of ICAI, committee member of Development Study Module of Karnataka Commercial VAT Officers. She is regular faculty at various Fiscal Policy Institute and GST certificate course by the ICAI. She has contributed on various articles on VAT and GST in regular contributor for the various professional journals like Bangalore for the Bangalore branch of ICAI Journal, Karnataka State Chartered Accountant Association, SIRC Journal, and IDTC Committee of ICAI. She has authored Technical Guide to Karnataka VAT for ICAI. She has co-authored the book on the Guide of VAT Audit and Value Added Tax in Karnataka, on VAT Audit for Institute of Chartered Accountants of India, the background material for indirect tax of ICAI, and she has been part with the discussion paper on transitional issues towards GST. She has also assisted in drafting background material on GST for ICAI and technical guide for GST audit in ICAI. She has been addressing more than 400 seminars across India, and she has addressed gathering of chartered accountants, tax practitioners, dealers, students, department officers on indirect taxation matters, including GST in various forums. So now, on behalf of WMEC, I welcome you, Madam Speaker, CA Annapurna Kabra ji. You can take on the lecture.
Thank you, madam. Screen is visible, ma'am?
Yes, yes.
Yes. First of all, I thank Women Empowerment Committee for giving me an opportunity to share a very dynamic topic, I believe, or very current topic. That is, I think, yes. I don't think so anywhere we miss this GST, whether you see media or whether you see any newspaper or wherever we are reading today. I think a lot of amendments are happening on this GST, and this is not only a taxation reform, and this is more or less like a business reform. So every industry is having an impact of this GST. So basically today the topic, I know I'll be starting by 6:15, so I'll try to end by 7:10. But I'll be just trying to touch on macro aspect of amendments in GST. And if any of the members have any issues, please put your questions in chat box. Definitely, I would like to take at the end of the session. So I think most of the members are aware that we had a 47th council meeting on 28th and 29th June of 2022. And a lot of notifications have issued, and circulars and other orders are issued. Basically on 5th July and 13th July, various notifications are issued. So let us have a glimpse of that, and let us try to understand how it is going to impact for all of us, and how to get updated with this GST. The most important is that getting updated in GST is not that something, how it is going to impact the industry and what transformations we are going to have in the entity. That also makes a difference when you are looking into the amendments under the GST law. So basically, first I just wanted, because yesterday I was reading this judgment of Union of India versus Philco Trade Private Limited. I think this is one of the most favorable decision to most of the SSCs who were not able to file this transition credit in the initial year of the implementation of the GST, that is in the 2017. And after that also for a certain period, it was open with certain conditions, but still a lot of decisions are there where the High Court has directed, or the courts have directed that the portal can be activated. It was not practically, it did not work out. But now when it has come from Supreme Court, the government has started working on the activation of the GST and portal, and wanted to give an opportunity to the registered person or to the person who is having the transitional credit and who were not able to file the transitional credit application. I think most of the members are aware what is this transitional credit. This is a credit which has occurred on the date of the implementation of GST pertaining to VAT credit, excise credit, or any other specific service tax credit as the case may be. So if any of the entity has this credit in your books of accounts and it is getting carried forward, you can just relook into that. Or because of technical glitch also, you were not able to file an application. The most awaited has come out. We are awaiting for the guidelines, but it will be activated for September 2022 and October 2022. Trans 1 and Trans 2, right? So this is one, we have to wait for the guidelines, but I just wanted to want to inform you on that. The next very important amendment which has taken place, I think it is going to add up the additional work or additional tasks to the entities now or to the practitioners for changes in Form GSTR 3B. I think most of the members are aware that earlier we had something kind of GSTR 1, GSTR 2 and GSTR 3. And GSTR 3B was only a payment challenge. But after the portal was not working for GSTR 2 and GSTR 3, they have converted this GSTR 3B into as a return and called it as a return, and it is treated as a return under the GST law. Now, treating it as a GSTR return, the details which the government is looking from GSTR 3B has got amended, and basically they want the additional information from GSTR 3B. So these changes are brought in the GSTR 3B. I think we all have to get updated with this because definitely it will be applicable for July or August 2022 monthly returns. So basically the government is very specific on this, and they have come out with a circular in 172/2022 giving a mechanism of credit disclosure. And I'll just try to bring out in the table format like how it has to be disclosed. So basically we have to understand, first we have to identify what are the type of credits we are having. So basically we might have eligible credit and ineligible credit. So whatever the eligible credit is there, that will be reported in GSTR 3B in table 4A. So whatever is there in your 2B, it will get automatically auto-populated in your GSTR 3B in table 4A. So there is no change after the amendment. Now, after that, ineligible credit, that is block credit. I think most of us are having a practice of disclosing only eligible credit in the GSTR 3B, right? We doesn't disclose what is ineligible credit in the GSTR 3B because we always expense in our books of accounts and we think that anyway we are not utilizing that credit. So where is the requirement for us to disclose that credit? But now the new requirement is that it has to be disclosed. Earlier we were reporting, but now it has to be disclosed in table 4B of your GSTR 3B. So in case if there is any ineligible credit, first please show it in 4A and then show it as a reversal in table 4B. This is one of the important, like block credit, we call it as a credit which is used in the course of business, but it is not eligible. Basically 17 subsection 5 credit. Then next, ineligible credit. There are two types of credit where the different reportings are required in 3B. One is block credit. The second kind of ineligible credit is time barred credit or place of supply issue credit. So earlier we were not reporting anything this kind of credit in our 3B, but now the 3B requires the SSC to disclose that in 4D of a GSTR 3B. What is this time barred credit? Time barred credit is a one which has been like 16 subsection 4 of GST Act specifies that there is a time within which the credit can be availed. For example, for the financial year 21-22, there is a time limit to avail the credit is up to due date of filing your September return. So up to October 20th, you can avail the credit pertaining to financial year 21-22. But if it is beyond that period, then it is ineligible credit. So this kind of credit should be disclosed in table 4D of your GSTR 3B. Earlier we were not reporting, but now it has to be disclosed. And next very important is eligible credit, but few conditions for availment are not satisfied. For example, you have received the invoice from the party or from the supplier, but you have not received the goods. In the goods, you are not eligible for credit, right? But now the law is requiring you that, okay, even though you have not received the goods, but if you have received the invoice, you have to show that yes, and once you receive the goods, again you have to avail the credit. I don't know how we are all are going to work upon this, but this will be a very, very mechanized
having some network connectivity issue from your end. Hello.
Audible?
No, ma'am, it is
Sorry,
not
some
stable,
technical
not
glitch.
stable.
We are used to in this. Now how it is?
Yeah, you just speak. Yeah.
It's not stable. Yeah. So
Now
we
it's
have
stable.
kind of permanent reversal and temporary reversal in form, reversal in GST or 3B. Audible? Audible, ma'am?
Yeah. Again gone. Sorry. Annapurna, ma'am.
Yeah,
Yeah,
I'll
you
try to
stop
do
your
it.
video and you can speak with audio only.
Yes. Am I audible? Yeah, I have stopped my video.
Yeah, now audible. Can you
Hello.
continue, ma'am? Yeah, you can continue, ma'am. Now audible.
Yes. Yes. So we have input tax credit, which is eligible and So we have the credits, and I think, sorry, I'm just missing the something. So we have something ITC available. So basically we have to understand today that the revised Form 3B is asking you to take the credit only from the credit which is there in your GSTR 2B. So if it is not there in your 2B, then you are not able to take in those credit in your GSTR 3B. That is the first point we have to remember. And second very important point we have to remember is that there are two kinds of reversal. One is permanent reversal and the other one is temporary reversal. If it is a permanent reversal, it has to be shown in 4B2, 4B1. And if it is a temporary reversal, like if you have not made a payment to your vendor within 180 days, or if you have not received the goods, all those will be temporary reversal. That has to be shown in table 4B2, right? So this is the way the new GSTR 3B format requires you to disclose the input tax credit. And there is a table 4D that will not impact your net ITC or net tax payable to the government, but that is only for the disclosure purpose. So that has to be disclosed. This ineligible input tax credit has to be disclosed. And even the input tax credit which is ineligible and which is taken beyond the time limit, that also has to be disclosed in 4D2. So I think this is what the disclosure requires as per Form GSTR 3B. And second very important is now the most of the entities require that we have to disclose the credit based on your books of accounts, but your books of accounts might be maintained based on your invoice accounting, or it might be in a different accounting period. But GSTR R3B requires you to account the credit only if it is reflecting in your 2B. So I think every one of us today have to reconcile credit ledgers, your GSTR 3 monthly basis. We are able to create whatever is disclosed in the 3B with the books of accounts. This is one important aspect I already considered. This we were ignoring when we were filing our GSTR 3B earlier. Now they have made mandatory that this all information has to be disclosed separately in GSTR 3B, and it has to be disclosed separately so that both can share the taxes according to the provisions of the law. And there is one more table which has been specified in the GSTR 3B, like for restaurant owner, if they are selling through e-commerce operator, they have to disclose it separately in the Form 3B. So I have just made a list of tables where you can disclose the Form 3B and GSTR 1 separately in case of supply to your in person, GSTR 1 as the case may be, right? Then next is very important is changes in the returns. What is the changes in the return has happened? Well, if there is any electronic to another entity, another state, for example, a branch, you are registered under the GST law. So in that case, you can transfer the cash from one entity to the next is we have there's a due date for filing your CMP 8 where you can file it up to July 31st, 2022. They have extended for the month for the year 22-23. You can file your CMP 8 by July 31st, 2022. Then late fee whichever is pertaining to your GSTR 4 has been waived, and subject to that, if you file that GSTR 4 by July 28, 2022. So I think by tomorrow, if you file this GSTR 4, there might be a waiver of your late fee for filing your GSTR 4. And annual return, if it is below, if your turnover is below 2 crore, then there is no requirement to file GSTR 9 for the financial year 2022, right? Ma'am, audible, ma'am? Ma'am, audible?
Yes, audible.
Sorry. Yes. So next, I was specifying on the payment mechanism that you can do even UPI and IMPS payment mechanism. Next is relaxation in disclosures in GSTR 9 and 9C is given even for 21-22, which was there and in earlier years. The same relaxations are continuing in for the financial year 21 and 22. And very important for the members to understand that there is a 6-digit HSN wise outward supplies has to be reported, because many times we ignore the disclosure of HSN or SAC code in our invoice or in our returns. So now they have made it mandatory that HSN digit 6-digit has to be disclosed in your GSTR1. And next very important is this duty credit scripts will not be considered as exempt supply for the purpose of reversal of common credit. It means whatever the Rule 42 and Rule 43 is specified under the GST law, which pertains to the reversal of input tax credit pertaining to your exempted supply and taxable supply. Earlier, this duty credit script was considered as exempt supply, and whatever the common credit was there pertaining to exempt supply was getting reversed. But now they have clarified saying that there is no requirement to get reverse your input tax credit pertaining to duty credit scripts, right? Under Rule 42 and Rule 43. Next, the most important amendment, I feel this is only the amendment which will be effective from 1st July 2017. And they have inserted Rule 88B and Section 50, subsection 3 also they have substituted. And they have inserted new rule called as 88B of CGST rules. So basically this rule is saying that interest will be liable at 18%. And interest would not be applicable on outward liability discharged by utilizing the input tax credit, provided the liability is disclosed in the return for the tax period for which the liability pertains. But if such liability is declared in the subsequent period, then you will not enjoy that benefit, and you have to pay the interest by only on gross basis and not on net basis. But this is not applicable if the proceedings are taken under 73 or 74. So for the better understanding of the members, I just try to put an illustration. For example, outward supply has taken place in the month of July 2022, and it is reported in the returns of July 2022. Return is filed on August 20, 2022. So there is no question of interest. Next illustration is July 22, outward supply has taken place. You have reported in the returns of July 2022. And return is filed on August 25th, 2022. So in that case, interest will be applicable by utilizing the cash ledger. You cannot utilize the credit ledger. You have to utilize, you can discharge that only by utilizing the cash ledger. And next is July 22 and reported in return August 22. And if you are filed in September, then interest will be applicable on the total liability without setting off your input tax credit. I think this is one important point. You have to note it down whenever you are going to compute the interest under Section 50 subsection 1 of the GST Act. Next, very important is 50 subsection 3, which is notified retrospectively. So now they have brought an amendment which was supposed to be, which is retrospectively applicable from 1/7/2017. If any of the entity has already paid any such interest only on availment and not utilization, I think you can relook into for making a refund of such interest. You can make an application for a refund of such interest. That is what I believe, because the law is saying that this interest will be applicable only if the input tax credit is wrongly availed and utilized. If it is only availed and not utilized, then there is no question of interest. And I will just try to give you the chart to understand how to compute the interest, looking into the balance in your electronic credit ledger. For example, for the incorrect credit is 100 rupees. Say credit wrongly you have availed is 100 rupees. If you are having a balance in your electronic credit ledger as 500, then there is no question of interest applicable. But if you are having a balance of 200, still there is no question of interest payable, because it is still you have a balance in your electronic credit ledger. But if your balance is only 90 in your electronic credit ledger, then you are liable to pay on the balance, that is 100 minus 90, only on 10 rupees you are liable to pay the interest and not on whole 100 rupees. So always whenever the computation of interest is done, I request the members, please look into the balance in your electronic credit ledger, and only on the balance or on the difference you are liable to pay the interest. So that is what the section 50 subsection 3 is substituted, and accordingly you can go through the rule 88B, which has given the mechanism of computation of interest in case of input tax credit wrongly availed and utilized. So this is what I just want to bring to the informations of the members. Then next is we have perquisite. I think this will be the most common issue for all of the entities, because every entity will definitely have an employees. They will have a contract with the employees, and they will agree for the salary. They will agree for certain facilities. They'll agree for certain perquisites with the employees. So depending upon your employment contract, your GST applicability will be decided. So if the perquisites is provided to the employee based on the employment contract, then it will not be subject to GST. For example, if you have already agreed with your employee that in addition to the salary, we are also going to give you the traveling facilities, or we are going to give you the certain perquisite like food facilities or any other facilities, then such facilities will not be, such supply will not be liable to GSTs. But if you look into the clarification, they have not clarified in case if I recover anything from the employees. For example, if I'm supplying the food, say 60 rupees is per plate, out of that 35 rupees is borne by the company and 25 rupees is collected from the employees. So whether there is an implication of tax on that 25 rupees or only 35 rupees will be considered as perquisite by employer to employee, I think this is what is unresolved in the clarifications. They have not clarified. They have only given a clarification saying that it is, if any perquisites are given by the employer to the employee in the course of employment, then it is not liable to GST. So I think we have to wait for further clarification on this. If any recovery from employees is happening, whether that is liable for GST. Because if you look Schedule 1, basically if it says that if there is any transactions between the related parties. So employer and employee are the related parties. So in case if there is any supply of services between the related parties, even without consideration, such supply will also be treated as supply under the GST law. So possibly with that Schedule 1, it can be treated as supply. Whatever the amount is recovered from the employees will be treated as supply based on Section 7 of the GST Act. And if any perquisite given outside the employment contract, that might have an impact of GST. So we have to look into the agreement. We have to look into what agreement we have made with the employee. Accordingly, the GST applicability will be there. So I request the members, please relook into your employment agreement with the employees. What are the perquisite? And I just say you that this perquisite, what we are referring, it is not the same perquisite what we are referring in our Income Tax Act, because that perquisite what is defined in income tax is quite different for the GST. So for GST, the perquisite is different, and for income tax, the definition of perquisite will be different. So it is not the perquisite definition which is borrowed from the Income Tax Act. So this is what we have to understand. So we have to look any agreement, we can reword it or anything we have to, that is not advisable, because ultimately what is entered with the employees will be decided for the applicability of GST. So we have to relook into your employment contract to analyze the impact of GST. And next is very important pertaining to refund. A lot of amendments are made this time. So one is clarification of inverted duty structure. What is inverted duty structure? Inverted duty structure is the one where your rate of output tax is less than your input tax. So in that case, you can apply for the refund. But there was a clarification that if the output tax rate is reduced because of any change in the rate of tax, then you are not eligible for refund of input tax credit. But now they have made a clarification that if your output tax is changed because of concessional rate notification, in that case, the applicant can apply for refund on his inputs which are used for the output goods, right? So this is what has been clarified. Next is value of export of goods. This was a dispute which is going on from last 4 or 5 years. whenever an applicant is making a application for refund, especially for the export of goods, because we consider it including insurance and freight, whereas the department says that they are going to consider only FOB value and not the invoice value. So there was always a dispute with the SSC and the department on this issue, though there was a circular which was issued in 125 and 135 by 2018, but there was no clarity on this aspect. So now Rule 89 Sub-Rule 4 has amended, and it has stated that whenever the registered person is going to apply for refund in case of export of goods, then at that point of time, the value of export of goods should be FOB value as per shipping bill or invoice value, whichever is lower. So that has to be kept in mind, and now it has been incorporated in the rule itself. And they have already introduced table 9A in statement 3 to report FOB value. And this, because of this formula, definitely there will be a reduction in refund, whoever has applied for refund in case of export of goods. And next rule is Rule 86B. This has also been amended. And in this rule also, it has been stated that it is pertaining to the recovery of erroneous refund. Whenever there is a refund which has been granted by the authority and which has been found to be erroneous, then the registered person is bound to repay back that erroneous refund to the authority. So once he repays back that erroneous refund to the authority, he will debit his cash ledger. But the department with that amount can recredit to the electronic credit ledger of the SSC. So it can do only through form PMT 3A, which introduced to enable recredit of erroneous refund which is debited from the electronic cash ledger, and it will get recredited to the electronic credit ledger, right? So this is one amendment which has happened. Next is clarification in case of refund on account of deemed exports. So in the case of deemed exports, like if you are making a supply to EOU, or if there is any supply against advance authorization, then in that case, either the supplier can apply for refund or even the recipient can apply for the refund. So in case when the recipient is applying for the refund, he has to disclose the input tax credit in his 3B. It has to get credited to his electronic credit ledger, and he has to apply for the refund accordingly. But he should not use this credit for the utilization purpose. He should use this credit only for the refund purpose. So that has been clarified in the case of refund on account of deemed exports, right? Then next is there is a change in the formula of inverted duty structure. I think most of us are aware that VKC footstep case was ruled by this Honorable Supreme Court, where it has held that there will be no refund of the refund will not be given on input services. The refund will be given only on inputs in the case of inverted duty structure. But in the decision, it has also directed to the authority and the council to give a revised formula for in the interest of the compliance of the law. So based on that, the notification 14/2022 has given a revised formula. Accordingly, the applicant has to apply this revised formula for the new applications, what he is going to make for the new tax period. So this amendment will definitely increase the refund of the applicant. But the issue today is whether I can apply this revised formula for the old applications which I am supposed to file now, or whether I can apply for new applications which will be effective from July 2022. So there is no clarity on this aspect, whether I can use this formula for the applications which is yet to be filed, but which will be filed post July 2022. I think this is nowhere they have clarified, but I believe that whatever this revised formula will be applicable, it will be applicable only for the new applications post to July 2022. And if any applications are pertaining to prior to July 2022, I think the old formula will be prevailing. Otherwise, it will not lead into uniformation of taxation between the applicant who has filed prior to July and the applicant who has filed post to July pertaining to the earlier period. So I've just given an example like how it is going to increase the refund of the applicant. So this is inverted duty structure turnover. This is your regular turnover and this is your total turnover. So whatever the output tax you have paid, it is 500 and your regular turnover is 450. So ultimately you are having a 950 as your output tax. And your input tax credit is say 5,000 on inputs and input services is 1,250. So earlier what we were doing, whatever the input tax credit we were having 5,000, we were proportionating to to the equivalent of your inverted duty structure. So 5,000 into 10,000 divided by 12,500 was leading as 4,000. Out of that, we were reducing the output tax of this. So 4,000 minus 500. So we were applying the refund for 3,500. But now after the amendment, it will be 5,000. This 4,000 will remain as same, but this 500 will again be calculated into 10,000 divided by 12,500. So even output tax also will get proportion to your turnover. So accordingly, it will lead into as 400. So 4,000 minus 400 will be 3,600 can be applied as refund. So this will be increase in refund in case of inverted duty structure. There are certain miscellaneous amendment has happened. Like for example, the department can issue for 17-18. They can issue the show cause notice up to June 30th, 2023. And they can pass the order up to September 30, 2023. So this is what we have. Because of pandemic, they have increased the time limit. They have given the extended time limit to the authority also to pass the order, and extended time has been given to the authority. And even to the applicant also for filing the refund applications. The pandemic time from 1/3/2020 to 28/2/2022, the time can be excluded whenever you are going to calculate the limitation period for applying the refund. This one important point I just want to inform the members. The next is declarations on the invoice for a taxable person with turnover above 20 crores. So I have given in my last slide, but there is some declarations which is required for all the SSC in their invoice whenever they are not supposed to comply with the e-invoice. For example, if you are doing a B2C transactions, you have to write in your invoice that I am not supposed to comply with the invoice even though my turnover is about 20 crore because I am not covered under Rule 48, provision of Rule 48. So this is one of the conditions which is required. I think most of the entities, you have to start implementing this, giving in your invoices wherever the entity is doing a B2C transactions or ACZ transactions or GTA transactions. So I think you can relook into that, giving the declarations in the invoice. And facility to pay I have already informed, and this is what is required. Now next important is utilizations of your credit balance. We all know that electronic credit ledger balance can be utilized for payment of output tax. But what can be your output tax? It can be also utilized for any self-assessed liability, or even if you have a credit, it can be used for any liability which is arising as a consequence of any proceedings. For example, if there is any demand notice which is issued by the government where there is a liability, and if you have a credit balance in your electronic credit ledger, that credit can be used for payment of the taxes. I think this point we have to remember. Otherwise, you need not generate the cash again for payment of liability. If you have a credit balance, that can also be utilized for payment of any disputed liability. Then electronic credit ledger cannot be used for payment of any RCM liability. This we have to be very clear. It cannot be used for payment of any erroneous refund sanctioned by cash, and it cannot be used for payment of any interest, penalty or late fee. But the question is, can we utilize this credit when we are going to file our GSTR 9 or GSTR 9C? This is your annual return and audit report. So if there is any liability during your audit, whether can we utilize our electronic credit ledger? According to us, yes, it can be utilized because that can be called as a self-assessed liability. And secondly, can credit be utilized for pre-deposit at the time of filing appeal? I think this is one of the disputed area. Can I use it as a pre-deposit? Because as you are aware, whenever the applicant is going to file the applications for appeal, then at that point of time, he has to deposit 10% of the taxes if he is filing to the commissioner appeal, and 20% in case if he is filing the appeal to the tribunal. So whether this credit can be utilized for payment of pre-deposit is a disputed area. But I feel that yes, the permission, because it is also a payment of taxes while you are filing the appeal. So I believe that electronic credit ledger can be utilized for paying the pre-deposit while filing the appeal, but attempt can be made for this. Next is, already I have told you there is an extension of time limit from March 1st, 22 February. So this pandemic time should be excluded, even for filing computing your time limit for filing the refund applications. So if any of you have missed out filing the refund applications for any of the transactions, you can please relook into that, and you can even file the refund application now itself. And very important is the next is there is a change in the rate of taxes. I think lot of small exemptions are removed now, and they are trying to bring lot of exemptions under the tax net. For example, like accommodation services, clinical establishment. For example, if the hospitals are giving a room rent to the patient, and if that room rent is exceeding 5,000, then that will be liable to tax at 12%. So that is what they have stated. But if the room rent is for ICU or CCU, then there is no levy of taxes. But otherwise, room rent above 5,000 is liable for taxes. We all are aware that healthcare services are not liable for GST. It is exempted from GST. But they have given an exception to that, saying that if there is a room rent in along with other facilities or other treatment, but there will be a levy of tax on the room rent which is collected from the patients, which is above 5,000. And next is hotel accommodations less than 1,000 is liable to taxes. As we all were aware, till 1,000 rupees, there was no taxes on hotel accommodations. From 1,000 rupees to 7,500 rupees, the rate of tax was 12%. And above 7,500, the rate of tax was 18%. But now they have removed this first slab of 1,000. They have stated that from 0 rupees to 7,500, rate of tax will be 12%, and above 7,500, the rate of tax will be 18%. And next is whether there will be GST on hostels, PG. I think this is also one of the interpretations. I believe that it is used for residential purpose, so there should not be any implication of GST on hostels and PG, but I think we have to wait and see if there is any, because this is different from the hotel accommodations, and today they have clarified only for hotel accommodations. They have not clarified for hostels and PG. And next, very important is residential dwelling to a registered person. For example, many of the companies take the residential property in the company's name, and they will use it for their employees or for their directors or for any other purpose or for any other guest, as the case may be. So in that case, the law has clarified today, saying that the recipient, that is the company who has taken that property for residential dwelling for by a registered company, that is a company who has taken from a landlord a residential dwelling for its employees or for directors. In that case, the company should pay the taxes under reverse charge. So this is the new entry which has been brought under the GST law. So I request the members, please go through this, because this will have an impact if any of your entities have any entered agreement with the landlord of a house which was a residential house, and now it will be liable to tax under reverse charge, right? And whether input tax credit is eligible, that is also questions, because the output usage is a residential purpose. But I believe that such expenditure will be claimed as a business expenditure, and it is used in the course of business. So I believe that input tax credit should be eligible, but as of now, there is a different views on this eligibility of input tax credit for the residential dwelling, which is used by a registered person. Next is the rate of tax specified for goods transport agency. So definition of earlier the GTA was not defined. It was defined in service tax, but it was not defined in GST law. Now they have defined GST goods transport agency. It is the agency which issues the consignment note, will be called as goods transport agency. So very important is that you have to test the consignment note. And next is they have the option now to pay the GTA has the option to pay the taxes either under the forward charge or under the reverse charge at the beginning of the year. So you have to decide at the beginning of the year itself whether you want to opt for forward charge or reverse charge. Very important is under forward charge, you have two rate of taxes. One is 12% with input tax credit or 5% without input tax credit. This is specified for forward charge. And under reverse charge, it will be always at 5%. So these are the mechanism which has been specified for GTA. So it is an option of the GTA to decide which rate of taxes he wants to opt whenever he is going to provide the transportation facilities to his recipient. And very important is that GTA should submit for 22-23 as already started. They have to file Annexure 5 by August 16 for the financial year 22-23 if they want to opt for the forward charge. If the GTA wants to opt for the forward charge, then they have to submit Annexure 5 by August 16 for the financial year 2022-23. If they don't file it, it will be presumed that they are opting for a reverse charge and not forward charge. So this one important point you have to carry. And very important is that invoices should carry the declaration. You have to write in your invoice as a GTA whether I am following forward charge or whether I am opting for reverse charge, so that recipient is very clear that whether his GTA is under forward charge or reverse charge. And the most sad part is they have removed the exemption of 750 and 1,500, which was there in the notification 12/2017. They have removed. So now no more small scale exemption of this transportations of small transportation amount of below 750. All that is not there. So from 1 rupee itself, there is a implication of taxes on this GTA charges or freight charges, as the case may be. So this we have to be very clear, and these all are applicable from 18th July 2022. And next is there is a change in the tax rates for the tour operator services, especially when they are giving the services to a foreign tourist. If they are giving to a foreign tourist, it is very clear that there is no taxes if the tour is outside India. But if the services are given to a foreign tourist and if the tour is within India, then it is taxable. And if the services are given to a foreign tourist, which is partly in India and partly outside India, then in that case, the tour operator services should pay proportionately to the extent the tourist has stayed in India. And basically the clarification has been given that it depends upon the number of days, and more than 12 hours will be considered as a day for the foreign tourist. And very important is that based on number of days or 50% of the consideration, as the case may be, whichever is higher will be considered for computing the rate of taxes for the foreign tourist receivables, right? So very important is that you have to calculate proportionate taxes if the foreign tourist has enjoyed the tour partly in India and partly outside India. And next very important is, I think this is the first time we are able to see that the government has brought a clarification on implication of penalty in case of fake invoicing. So this is the most important. Who will be liable? How much will be the quantum of penalty has been given with the help of the illustrations, right? So one is, if the first illustration is that if the A is issuing the invoices to B without any supply of goods, so there is only a bill trading, there is no such supply of goods. So A has given bill to B and A has already paid the taxes to the government. So B will not have any impact, but A will have the impact of paying the penalty of 20,000 or tax amount, whichever is higher. That is under 122. Now, second scenario is A is issuing the invoice to B without any supply of goods. But what B will do, B will utilize his credit against the genuine transaction. So in that case, A will have the same penalty, but B will also have additional penalty under 74 of the GST Act. This is what we have to remember. So this will have a huge impact if he is taking the credit without receiving the goods. And third scenario is A is also making the invoice to B. B is also making the invoice to C. There is no question of movement of goods between A to B nor B to C. So in that case, the penalty for A and B will remain same, but for C, it will be the penalty of 74 because he has utilized that credit to the extent of 100% of taxes, right? So this is what we have to remember, that there is a huge implication. And once you apply 74 penalty, that is 74 is for adjudication for fraud, misrepresentations or misstatement. So all that will be covered under 74 and you will have a huge impact of taxes plus penalties and interest as the case may be. So ultimately the person who has retained the benefit under this fake invoicing will have a huge penalty, not only under 122 and 74, he will also have a 122 1A penalties, and also he can be confiscated under 132 of the GST Act. And now no more duty-free shops will be treated. So now they will be treated as exports. So this is what they have made a changes for duty-free shops. And there is some terminology where they have defined to mean specified officer or authorized officer. This was missing earlier. They have spoken only on specified officer. Now they are saying that specified officer or authorized officer. And next is, I already spoke to you that declaration should be given. So I request members, please relook into your invoices and see that you add this column, this statement whenever there is no e-invoice in your invoicing provisions, especially when your turnover is exceeding the 20 crore. So this should be written in all your invoice. We hereby declare that though our aggregate turnover in any preceding financial year from 17-18 onwards is more than the aggregate turnover notified under sub-rule 4 of Rule 848, we are not required to prepare an invoice in terms of the provision of the said sub-rule. So this has to be printed and issued an invoice to your recipients. And this is a most hot topic. I think most of the members are aware today, but still I want to bring to the notice of members, like how what was the earlier rate of tax and what impact of change has happened. So GST was applicable at 5% on specified goods, like especially when they were put up in a unit container and when they had a registered brand name. So very important that if only the goods were branded and they were put in a unit container, then they were liable to tax at 5%, especially for the food products and other products. But now there was a dispute because a lot of unbranded products, they were not levying the taxes, and only branded products were levying the taxes. So now to avoid such disputes, they have brought this brand name is replaced with the terminology as pre-packed and labeled, which has been referred to the Legal Metrology Act 2019. So whatever is defined in this Legal Metrology Act has to be considered to understand the pre-packed and pre-packed commodity. So what is pre-packed commodity here? Pre-packed commodity as defined in clause L of section 2 of Legal Metrology Act is where the package in which the commodity is pre-packed or a label security effects that is required to bear the declarations under the Legal Metrology Act. So if it is defined as a pre-packed commodity for Legal Metrology Act, it will be treated as pre-packed for the GST purpose also, and accordingly 5% will be applicable on supply of pre-packed and labeled goods. So the conditions to attract the GST is that it should be pre-packed. It means it should not be packed in the presence of the buyer. The second is that it should bear a declaration which is specified under Rule 6 or Rule 24 of the Legal Metrology Act. And the third important is that pre-packed commodities should be supplied in packages containing quantity of less than or equal to 25 kilo or liters. It means the quantity is more than 25 kg or more than 25 liters, then it is not liable for GST. But if it is less than 25 kgs or 25 liters, then it is liable for GST. So all these conditions should be fulfilled to have an impact of GST. And if this food grains, pulses, so you have to read 6/2022 to understand what are the food products which are covered under this pre-packed and labeled product. So like food grains are there, curd, milk is there, then buttermilk is there, pulses are there, food products are there. And if such goods are sold in loose forms, then they are exempted. So we have to understand that if it is sold in any loose form without any pre-packing, then it is not liable for GST. So this is one important amendment which has taken place for pre-packed, and most I think this has been effective from 18th July 2022. And these are the goods where you cannot apply for refund in case of inverted rate structure duty. These are the goods I think you have to remember on this so that we are clear whenever we are applying for refund. And there are a lot of amendments has happened for change in the rate of taxes. Due to paucity of time, I'll try to cover only macro rate of taxes so that you can relook into your contracts. Because this rate of tax is going to impact your contracts, you have to revise your contracts, or if your contracts are inclusive of taxes, then I think you have to bear the taxes for those cases. So please relook into that, because a lot of contracts have a lot of rate of taxes amendment has happened recently in notification 2/22 or 3/22 or 4/22 as a case may be. So relook into those notifications, and especially like this constructions or work contract services like dams, canals, road or single residential unit, or this low cost houses constructed under affordable housing or pollution control. Earlier it was 12%. Now those contracts will be liable to tax at 18%. And hotel accommodations, already I've told you, it was exempt earlier. Now the new rate is 12%. And services by way of licensing, registration and analyzing or testing of food samples supplied by FSSAI, it was exempt earlier. Now they have made it liable to tax at 18%. And training or coaching in recreational activity relating to art or culture provided. For example, if any institution is giving a dance training, and if it is given by individuals, it is exempted. But if it is given other than by individuals, then it is liable to tax at 18%. So this we have to be careful on that if any institutions are there. And pre-packed label food, already I told you earlier it was exempt, but now some goods are at 5% and some goods are at 12%. And e-waste was liable to tax at 5% earlier. Now they have increased the rate of tax to 18%. And solar water heater and system, earlier it was 5%. Now they have made it as 12%. And we have diamonds, other than this rough diamonds and simply, especially in Gujarat, I think we can see this 0.25% earlier, the rate of tax was there. Now they have increased the rate of tax to 1.5%. I think this will have an impact to the diamond industries. And the last amendment which I'm going to discuss now is supplies to research institutions, government laboratories, regional cancer centers. So earlier this supply, especially in July 2017, it was liable to tax at 5%. Any commodities you are supplying to this research institution was liable at 5%. Now they have removed this and they have increased the rate of tax to as applicable. So depending upon the type of goods you are supplying or type of services you are giving to research institution, the rate of tax will be applicable accordingly. So these are the certain rate of taxes. There are a lot of rate of taxes changes in the case of job work of leathers, job work of hide, especially because of VKC footstep case, they have increased the rate of taxes. And why some of the entries they have increased the rate of taxes is to avoid the refund of inverted duty structure so that they can adjust their input services against the output tax liability. So this is the reasons there are various rates of changes in the rates of taxes. So I think with the time limitations, I have tried to cover the macro amendments in the GST law. So if there's any issue, any questions, I can take it up.
Yeah, we will just take a quick rapid fire questions. A couple of them are there.
Yes.
One question from Ms. Rajni. If a company doing export turnover as per books is different from GST portal, turnover due to movement of goods in port, so which turnover we can take for year-end audit?
You have to take it as per your shipping bill or your invoice, whichever is lower. So you have to consider the value which is there in your shipping bill.
Okay. If packaging only done and not logo and entity name printed, whether GST applicable?
Yes, because if you read the definition of pre-pack commodity, they have specially defined as where the package in which the commodity is packaged or a labeled. They have not used the word and labeled. So if you read the definition here, pre-pack commodity as defined is where the package in which the commodity is pre-packed or labeled securely affixed. So as it is not used as and it is used as or, even if it is pre-packed, it is liable for GST.
And whether under forward charge mechanism, can a GTA switch between 5% and 12% in a year?
Yes, he can switch between the year. In forward charge, he can, but he cannot switch to reverse charge. And he can even to contract, but it should be intimated at the beginning of the year.
Intimated regarding forward charge only, right?
Yes,
but,
only forward charge.
The rate he can change.
Yes, rate he can change, but he has to intimate.
But the calculation will be tedious for ITC and
yes,
right? Yeah.
Yes.
Yeah. Thank you so much. I think due to paucity of time, I express my sincere gratitude to CA Annapurna Kabra, who has really taken the session, breathless session, I should say. You reminded me of Shankar Mahadevan for his breathless song. Like that, we had a breathless session. So thank you so much for taking up time and giving a very clear and
applies for technical glitch. Applies for technical.
In spite of the technical glitch, you have covered everything. And I think this is very lucidly you have explained. You've also given examples for interest calculation, which was confusing probably for some. And I really thank from bottom of heart for giving a lovely presentation. I also thank our chairperson, Sri Priya Kumar, chairperson of the Women Members Empowerment Committee, for organizing such wonderful programs. I thank our vice chairperson, CA Preeti Savla, who has been very active on such motivational programs, who has updated us on the social audit course and the social audit standards, which will be coming this year. And for giving us all the opportunity, I thank the back office for being very cooperative with the coordinators and the speakers and taking charge of the whole thing. They are the ones who really worked hard for all this. I thank technical team and of course, the viewers, the spectators, who have been listening so patiently and giving in their queries. There was one query whether this presentation will be forwarded, but this whole event will be recorded and put on the ICAI TV, where you can watch the whole session again, in case you want to re-look into some issues. Thank you so much. Thank you, everyone. Thank you, the coordinators. Thank you.
Thank you, ma'am.
Thank you. Thank you so much.
Yes. Thank you so much. Thank you, Hemal.
Recording stopped.